What's up, what's up, what's up, team? Let's go. Let me see. First like. Let's go, Abdemonk. Let's go. Love to see it. What's up, Beefy Beats? What's up? What's up, Kushfear? I'm sorry if I mispronounce any names. What's up, Kelvin? Noti gang. Love to see it. That's what I want to see. The notifications turn on. Love to see it. What's up, what's up, what's up, Adiola? Vibehav. Sorry if I mispronounce it again. Safdar, what's up? What's up, Noel? Marwan, great to see Eric. As always, love to see it. What's up, Daniel? What's up? What's up, Bharat? Be Reezy, new guy here. Give us a warm welcome for the new guy here. Love to see it. Let me know what you think of it at the end of the live stream. Love to see it. Great to have you here, brother. Great to have you here. Anaheim, let's go. Let's go. Vacation here, Bali, Indonesia. Enjoy it, brother. Enjoy it. Did you even take the time to watch some trading videos? Enjoy the vacation, brother. Love to see it. How are you, my mentor? I'm doing great, brother. Thank you for asking. I'm doing great. The nights haven't been that long. Nothing crazy. Just a lot of work for me. But that's what I love. I love to do it. How have you been? How has everyone been here? Hope everyone is doing great. Let me see. Let me see. Hope everything is fine for you. Hello, guys. What's up, Phil? How you doing? How you doing? What am I see? Add Nifty to your list. That's a great shout. Let's do that right away. Let's do it right away. Nifty 50. Perfect. Great shout. Thank you for that. Thank you. Let me see. Where are we? Where are we? Love to see it. I saw when we'll get our live face cams. That is a great shout, actually. I was thinking about that as well. And it's a great shout. The only thing is, like, a face cam might be great if I'm doing a rant, for example. That might be great if I'm doing some mindset talking. If my screen, for example, is like this and I'm just talking, then a face cam might be great. But if I am talking about trading itself, I would not really have a face cam on my screen. I think it's more so distracting in that way. But that would be nice. Yeah, would be nice. Something to do in the future for sure. For sure. Look forward to begin a new week and forward to test new concepts. Learn. Love to see it, Joaquin. You're in the masterclass, right? In the masterclass. Happy to see you here. Happy to see you. Let me see. 75 plus watching with 23 likes. Come on, guys. We can do better. I love that from you, Musa. Thank you for that. Appreciate that a lot. All right, let's go over the weekly forecast first. And then afterwards, we'll go over the questions, some questions, and then we'll see where we're going. All right, let's go. I added Nifty to the list. Again, if you have other pairs or anything, then do not hesitate to let me know. Perfect. Let's start off with the dollar, of course, because the dollar is our main part, I would argue. So here on the dollar, I mentioned last week that still we were bullish. Not pretty sure where we were continuing higher off of. We had a weekly fair value gap in the making right there. This weekly fair value gap is completely irrelevant right now. And what I mean by that is that this weekly fair value gap, it's not something I would expect higher prices of right now. Because as you may have noticed as well, or you may have learned from the fair value gap video, and the fair value gap video I usually refer to is the one, the fair value gaps are telling you a secret story. It's that if we are close to the drawn liquidity already, then you would likely not expect something like this. For like the way you can see it is we are closer to the drawn liquidity right now than we are to that fair value gap. So it doesn't make sense for price to come first into that fair value gap and then continue higher. If that were to happen, I would expect lower prices. So that is already something that we can take into account. So that weekly fair value gap is out of the conversation. We don't look at that for higher prices currently. So what are we looking at for higher prices? Well, it's a pretty rare sight. We have a volume imbalance in Forex. Now, usually I don't really like to use a volume imbalance itself, but since it's in Forex and we have no fair value gap there still, that might be nice to use. Now, let me actually open the economic calendar as well, just so I can give you some more information on, all right. We don't have any news on Monday. Then Tuesday we have some news. Wednesday as well. Thursday and Friday as well. All right, interesting. Looking pretty similar to last week as well. Interesting, interesting. All right, nice. So that already means I already know that I don't want to trade Monday. So Monday will be a no trading day for me. I will stay out of the market, and that's usually what I do. And then I focus on Tuesday, Wednesday, Thursday. And for Friday, I don't take trending trades. I usually take thank God it's Friday setups. So right here, this is a volume balance that we can potentially work with. On a 4 hour though, we had this order block right there to work with as well. Not really clear for value gaps. Now, will Monday already push price higher here? It could, but the thing is, if Monday has no news, there's not a lot of volatility in the market. At least that's what we expect, right? So then it can just consolidate, and Tuesday can do something like this, or even Wednesday can do something like this, and then we continue higher. So that is something to take into account. Again, this is not the cleanest price action that we're working with right now on Forex especially. So it's a lot of waiting, being very patient. And this is also August for you. So if you haven't experienced August, it's great to trade because you can truly experience August, because this is typical August behavior where, yes, we're pretty sure that's going higher, but where are we continuing higher from? That's also what we would like to know, right? So until that is clear, then we just wait. We wait and we see. But again, bullish on the dollar for sure. That's for certain. Then on ES, let's take a look right here at ES. If the dollar is going higher, then ES is likely going lower. Now, last week wasn't the nicest price action right here. And I mentioned that if we are not continuing lower off of this for value gap and we had a sting into it and we don't immediately continue lower, then I would almost expect higher prices. And by the looks of this, there's not a clear direction on the daily for me, but there's no reason to call a bottom yet. So that is something to take into account. There's no reason to say that now we are going higher off of this right here. If there was a daily fair value gap to work with, it might have been a different story, but there's no reason to say, yes, we are going higher. But there's also not a clear reason to say, yes, we are definitely going lower. The only thing we have going for us right now is this huge ST right there. So if we are going lower, then we might be seeing something like this to target these equal lows that are being made right there. So that it would be my preferred thing. Taking short off of these highs right there, especially if it happens during equities open. During equities open, you will likely see it spikes to one side. So for example, this is a London session in your indices, and the equities open either spikes to that side or that side. If it spikes to that side, I want to get involved here. So just your typical entry model, just your ST or whatever you want to use. And then that is where you want to get involved. And then you want to target those lows. That's typically what I would want to see. Then on DAX, what are we seeing? It looked very promising, actually. I don't know if you all saw it on Monday, last Monday. Looked pretty promising there, but it did not play out. And we had a bigger retracement than expected. Again, leading us to having no fair value gaps. And I think by now, if you've been an active follower of the weekly forecast and even the videos itself, you know that I absolutely love fair value gaps. And because fair value gaps are essentially telling you where it wants to go to. And that's why I sort of need fair value gaps in my analysis. They make it a lot easier. So right now, on the 4 hour, we do have something to work with because we have this breaker block right there. And we can head lower from there. Now, currently, just what goes through my mind here is that on this Friday, it was not ready to expand lower. And that's why I always tell people, don't take trending trades on a Friday because it's just not as high probability as it is on a Tuesday, Wednesday, Thursday. And Thursday even is also not that high probability, I would argue, because that's where the trend can end, like we mentioned as well in the video. So this can do something like this, where it first sweeps this and then we continue lower. Because what price essentially is doing right there is it's sort of seeking a new premium array to go lower from. So a new premium array, a very easy premium array, is just the swing high, what it left on Friday, and then it continues lower. That's what you see a lot of times. So that is something that we can see. And again, same target. First absolute target would be this low. That is the context where we go into our market maker model as well. Because then, oh, this is the wrong one. And then that low, and then eventually that low. And what you can see then is that once we do sweep that and we do indeed get our entry pattern right there, then all this is where the short-term range will hold. And then eventually we might see something like this. And then we continue lower. So that is pretty interesting as well. Down here we have NASDAQ. What is happening on our beloved NASDAQ? On the monthly time frame, we of course came into that monthly fair value gap, but we are not seeing a clear rejection just yet. If anything, we look still quite bearish because we're not respecting this as well. We're not respecting the daily fair value gap. So if anything, we are still looking quite bearish as well on this instrument. Now, here we have this for our fair value gap to work with. Same story. I would not expect a retracement. I would not expect a retracement into that fair value gap and then continue lower. That's just not something I would like to see. That's a way too deep of a retracement before continuing lower. If anything, I would like to see it respect that breaker with that fair value gap, and same what we just saw on DAX as well. This can happen where we sweep that high and then we continue lower, targeting that low first and then that low. So eventually the target is that low right there. Then on YM or Dow, we mentioned last week that we are not really respecting this weekly order block, right? So we could even target those lows right there. If we were respecting this weekly order block, then this week would have likely been some kind of bullish candle. And just by not being a bullish candle right there, we can already argue that it might want to continue lower right there. And that's the probabilities talking. Again, that's the bearish versus the bullish arguments talking. There's not a lot of bullish arguments right there. There's only currently bearish arguments in my opinion. So then on the daily time frame, we don't have any fair value gaps to work with. Now on the daily time frame, we did already sweep that high. So for this high to now also get swept, even though we don't have a daily fair value gap right there, that doesn't make any sense. Because then it keeps sweeping. How many times does it want to keep sweeping? That doesn't make any sense, right? If that does happen, then we might be in for seek and destroy conditions. So I would expect that high to be protected. And then where are we continuing lower off of? We have a nice order block sitting right there. Now again, since Friday came into that order block right there, it can just mess around here for a bit and then continue lower. Just because we need that volatility from Tuesday, Wednesday, whenever. So that is something to take into account. But then eventually target again being that low and then eventually those lows. So this right here, if we do get above that high, then that is again where your market maker model forms your context. That is the most important part. Then we have the beautiful Nifty. We have our beautiful Nifty right here. So did we mention, where were we last week? I'm always a bit confused about Nifty because the gaps sort of throw me off guard and I don't look at it throughout the week, to be honest. So we are coming off of that daily fair value gap right there with that order block as well. Then we're continuing lower off of that. We mentioned, I believe, that we were expecting lower prices off of that fair value gap as well. We did sweep this low again and then we swept this high. Now we have a pretty significant downfall, pretty significant drop, you could say, where we are creating a fair value gap. I know it's hard to see on Nifty, but we are indeed creating some form of fair value gap right there. And the way I would use this fair value gap is first off just using this body right there. You could just take it like this and then focus on where the next candle also closes and having this overlapping low as well right there to work with. So this currently is looking pretty bearish. Let's see what we can actually look to target. We can even potentially look to target this overlapping high right there, which could be nice. Right there. Let's see if we have something to work with on the 4 hour. You can see also a daily nested order block. It's a lot of confluence going for us. We have a fair value gap. We have a nested order block right there to the right side. And on the left side, we have an old high. So that's 3 discount rates right there, which is absolutely beautiful. Then on the 4 hour, again, this is where we do have a nice gap. Now, the reason I do use that gap is because there's no fair value gap right there. So I wouldn't expect it to come all the way into that gap right there. but it can do something like this and then continue lower right there. So this does look pretty nice. And again, this is the same story as on what we just saw on YM. I would not expect this high to get swept. That doesn't make any sense. For it to sweep that high and then sweep another high after that, then doesn't make any sense. So this fair value gap or that volume imbalance, that's what I would look at to trade off of. Then on Australian dollar, US dollar. So we came into this low actually. Oh, we came into this low right there. Right there. And we are, by the looks of it right now, respecting it. Again, this does not look like a real low to me. I call it a fake bottom. That's a mentorship concept, and that's essentially what that looks like, where the market is not really having the bottom right there. You can compare it to this bottom, where this is also a fake bottom right there. And then you have one more sweep, and then you have the real bottom. And that's exactly what I would look at here as well. So that's what I want to target, essentially. So how can we continue lower? We have this breaker right here. Then we have very ugly price action right here, which is a bit of a shame. Now, this fair value gap could work, as in we could come back into that, but it's the same story where I would only want a real sting into it and an immediate rejection lower. Because if we mess around right there and if we keep on consolidating right there, then I would argue, all right, yeah, we might be going higher indeed. Again, that doesn't mean that when we do come into that fair value gap and we are not immediately rejecting, that my whole bias switches. That's not the case. But it is the case that I want to potentially look at another pair or another instrument because it has more bearish arguments. There's higher probability price action somewhere else. So I want to trade that instead of just messing around in low probability conditions. So that is what I would demand of a price. And when price does deliver to my demands, it is exactly high probability. And that's what I would want to see. So that, keeping in mind this high as well, that is already a premium rate. That is when we don't even need to come into that fair value gap. But it is likely that if price is sweeping that, then it's likely also coming into that fair value gap and then continue lower, because price loves fair value gap and price loves to target fair value gaps and trade lower off fair value gaps. There's always a fair value gap involved, always, I would argue. So lower prices right here. Then euro, US dollar, what are we looking at? What are we seeing? Again, not the cleanest price action you can see right here. Just hasn't been the cleanest price action. But again, it is what it is. We can complain, but we can also just keep going and adjust our risk. That is important. Then we do have that low to work with, which is a first nice target. Afterwards, we have a swing low right there. But if we are targeting this swing low, then the obvious thing to target as well is that swing low as well. Just, of course, inverse to the dollar. So if the dollar is going higher, then this will obviously go lower. Now, this fair value gap is not really relevant to me because we already came into it once, twice right there. We already sort of used it. And right now we are not rejecting off of it. This fair value gap is not really relevant for price to push higher off of. We can see a rejection, as in we can see something like this and then continue lower. But this is not something where I would expect something like this. No, absolutely not. Then on the daily time frame, now again, the same issue as that we saw on the dollar. Where's the dollar likely going higher from? Not too sure. Where's euro US dollar likely going lower from? On the daily time frame, I'm currently not too sure. We do have an order block to work with right there. Now, if this can become a fair value gap, then that would be absolutely beautiful. Would be lovely, because then we have an order block overlapping with a fair value gap right there. And the fair value gaps, they are there because they tell you where price wants to go. So right there, if we do look at the 4 hour, this is also a bigger 4 hour order block right there. We do have some fair value gaps to work with right there, but since it was Friday, you wouldn't expect price to trend lower. You would more so want to see a thank God it's Friday setup, which is also always a counter trend trade. Thank God it's Friday. So right here, what we could see is again a sweep of those highs. We have a very small fair value gap sitting right there. On Monday, if we do consolidate something like that, and we are leaving behind a daily fair value gap right there, so then that would require Monday to continue a little bit lower, and something like this, and then Tuesday to sting into that, or Wednesday, and then we continue lower. If we have a daily fair value gap to work with there, then I want to full margin that daily fair value gap. No, I'm joking. Not financial advice. Don't sue me, please. So that's how I would view it. Then on GU. On GU, we finally saw some kind of price action to work with. Absolutely beautiful. Well, beautiful is an overstatement, but it was nice. Let's put it that way. Then we do have that target. That target is pretty far for now. Do we have something to work with on a monthly? We are coming into that order block, that body of the order block right there. It's pretty interesting, but not really relevant if the US dollar just wants to continue higher right now. Let's see what it wants to do right here. Again, are we creating a daily fair value gap right there? It would be a very small fair value gap. There's not an overlapping order block right there, but there is an overlapping low in the form of this low right there, which could be nice. And on the 4 hour, what are we seeing? On the 4 hour, it looks pretty decent actually, because we have this order block right there. And we also have this fair value gap to work with, which is just above this high. So if we are continuing lower, where are we likely continuing lower from? Well, if Monday is consolidating right here, it's the same case as on EU, then I would expect that daily fair value gap to hold right there and push price lower. If that doesn't happen and we don't create a daily fair value gap, then I would expect price to continue lower off of this 4 hour fair value gap right there. So it's an if then. If Monday creates a daily fair value gap right there, then we continue lower off the daily fair value gap. If not, then we continue lower off the 4 hour fair value gap. And in the meantime, we just wait. We wait for either one to get traded into, and that is where we want to get involved. And then you have the exact same context where you have your market maker model forms right here targeting the swing low right there, or you have a daily fair value gap, which would be somewhere around right there, and then that low, and then eventually these lows right there. But just to get a clearer target or an easier target right there, you can use a swing low to the left right there as well. So that is how I would look at that. USD Canadian dollar. All right, let's see, what does it want to do? We also have a volume balance right there. Again, this fair value gap is completely irrelevant. It's not relevant. The thing relevant actually here is pretty interesting, because now you can see we have an early breaker, as I like to call it, because this right there is already a form of some support right there. So that is something to keep in mind, which the drawn liquidity is then that high, and then eventually those higher highs, but the clear drawn liquidity for this week is that high right there. Then on the daily time frame, we have this order block that high. Again, same exact story. If we are creating a daily fair value gap right there, I want to trade off of that. If we are not creating a daily fair value gap right there, then I would look into the 4 hour and see, all right, we could sweep those lows and then continue higher right there. It's just depending on if it's creating a daily fair value gap, then I want to trade off of that daily fair value gap with that order block right there. It's very much dependent on that. All right, but again, bullish, for sure, bullish, for sure. USDJPY, yes, the beauty. So we are coming off of this weekly fair value gap. We just reached this target right there. Now, this is not a swing high on the weekly, but on the daily, it's a nice target in the form of this. Then what I would do now, I would not wait for the weekly to create something new. I would wait for the daily to create something new. So on this daily time frame, above this high, and this is exactly what we mentioned as well in the market maker model video, right? Everything above here was unclear and ugly price action until we had a retracement into a new discount rate and we pushed higher because we had new context from that low to that high. That is the exact same with now we have already the context is done. So what do? We wait for new context because above that high right there, that is not where you want to get involved. That's a low probability. So now you want to wait for new context in the form of potentially daily fair value gap where we now can continue higher off of. And you can see that we first came off of a monthly order block, then off of a weekly fair value gap, and now potentially off of a daily fair value gap and a daily order block. So that is combining the time frames constantly. So here on the 4 hour, you're making it yourself very difficult if you're trying to trade this and finding a discount rate that you can trade off of. And again, that's completely possible. It is possible. Don't get me wrong, but it's this skill that you need to consider. How many hits are you taking before you get the right move? You don't want to take a lot of hits before you get the right move. Because if you were to trade, for example, this 4-hour value gap right there, and this is what I went over very in depth in the masterclass and in the essential package as well. This is a nice trade. Once we retrace deeper, that is not a nice trade anymore, because price has no reason, based on a fair value gap video as well on YouTube, price has no reason to retrace into that breaker that deep. There's no reason for that. So then my mind is already going to, all right, I think price is consolidating here to go to where? To go to that weekly magnet, that weekly discount rate, to continue higher off of that right there. So that is very important to understand. So right there, because we don't want to take a lot of hits before we get the right move. I would rather wait for one single discount array in the form of one single fair value gap potentially overlapping with these highs right there, instead of having one discount array or two right there on the 4-hour. We also have that high, we have this low right there, we have that fair value gap right there. Where does one to continue higher off of? I'm not too sure on the 4-hour. On the daily, you only have one choice because you're waiting for a daily fair value gap. So you have one choice. You can't do anything else. It's the same with the weekly right there. There's nothing else to continue higher off of. You have that weekly fair value gap and that order block. There's no other arguments. So it becomes very easy, right? It needs to happen. And that's exactly what we went over as well in the forecast, etc. So yeah, that's how I would look at that. Then on silver, what are we seeing? Again, we are not taking out that low. So now it would be stupid from me if I said, no, we still need to take out that low and then potentially continue higher. No, obviously not. Right now, we are very bullish, even with the dollar going higher. Silver and gold are looking very bullish right now. So right now, we might be targeting those highs. But now you need to ask yourself, if the dollar is moving higher and silver is also moving higher, is that the highest probability price action that you can find? I think we can all find the answer pretty easily. No, obviously it's not. So you would rather look at something like USDJPY, where it is in sync with what the dollar is doing. So right here is not the highest probability. So keep that in mind, please, because we might just be in for seek and destroy conditions if that happens and we are not correlating, or we can just target that high right there. So that is something to keep in mind right there. Then we are currently coming off of this daily fair value gap. Now again, since Monday has no news, what you can see is that Monday will mess around and the Tuesday will again sting into that daily fair value gap with that swing low right there and then continue higher. That might very well happen. So that is something to keep in mind. Then on gold, it's a bit of a different story because we are coming into this weekly fair value gap. Now, by the looks of this right now, this is nice because this is exactly what I mean with it's respecting that weekly fair value gap, because it's not closing inside of it. It's not disrespecting it. Perfect. Absolutely lovely. Also with that overlapping order block right there. Absolutely beautiful. So right now, it's a battle between this weekly premium array and that daily discount array right there. If we are, and you can see this as a sort of, this is where you don't want to get chopped up. You either want one of them to win. Again, which one will likely win? Which one is the higher time frame? Which one is the time frame above it? It's a weekly. So the daily needs to be a context of the weekly. So right there, you wouldn't take longs off of this daily fair value gap because there's a weekly fair value gap sitting right there. So you would prefer, because it's the stronger PD ray, the weekly to continue lower right there. So that is something to take into account. Now, right there. Now, if we are continuing higher, of course, we will continue higher off of the daily fair value gap right there. But Friday came into it right there. Friday didn't push that higher. Yes, it's also respecting it. And that's where it's scary now, because we're respecting this daily fair value gap and also respecting this weekly fair value gap. So that's where you need to be careful. You want a clear new discount array or premium array on the 4-hour. That's what you want. So either a 4-hour fair value gap higher or a 4-hour fair value gap lower. Whichever happens, that's the direction you want to trade in. That's as easy as it is. So that's your step-by-step manner right there. We create a 4-hour fair value gap higher, we want to trade that. If we create a 4-hour fair value gap lower, we want to be trading that. As simple as that. Perfect. Then on Bitcoin, do I need to say anything? Oh, Bitcoin. And Bitcoin is typical Bitcoin, like super, super, super ugly. Like absolutely horrendous. Absolutely horrendous. I won't tell you anything about this as well. Like again, I can tell you the same thing that I mentioned last week even. Like nothing has changed. That's how low the volatility is in Bitcoin. So if we create new order flow, then again, target that monthly CB that is still sitting right there. If we don't, then we will likely continue lower, right? So there's nothing to do on Bitcoin right now. Skip, exactly. Yeah, it's atrocious. It's absolutely horrendous. Let me see. Where was I? Where was I? Love to see it. Love to see it. Didn't get a notification. No worries, Nelly. No worries. Let me see if... I don't know if there's something I can do about that, about the notifications. Would it be nice? What about the 4-hour fair value gap with inducement on DXY? Yeah. This one. Yeah, exactly. That is something that could happen. This is, again, the same story. If we are continuing higher right here, it's an if-then. If we create a daily fair value gap right there, I would expect higher price of that daily fair value gap. And if that daily fair value gap doesn't get created, then I would either expect price to come into that fair value gap and then continue higher, or it can do some fuckery like this, and then just continue higher. The same as we saw last week, where it's just very ugly. Like if you zoom out on the daily time frame, just look at this price action. This is what a lot of people were trying to trade. Like not high probability at all. So yeah, it's very ugly price action. But yeah, you're right for sure. No worries, Mariana. No worries at all. No worries. Can you share some clarity on when you go with 5-minute or 15-minute on a 4-hour fair value gap? Also, sometimes you use 1 hour on daily fair value gap. Sometimes 4-hour what criteria are you using to justify that? It's a great question. So normally, it's a mentorship thing. It's a masterclass thing, essential class as well. But normally what you would do is you would divide the number of minutes by 60, because then you get to a certain number, and around that number you want to use your logic and see, all right, which one suits me better. Now, usually why I sometimes go over the 1 hour or the 15-minute, 15-minute gives you more insight when you're using a daily fair value gap. So for example, let's just take an example. Let's actually take this one. Take this weekly fair value gap right there. And we use the same concepts, right? Wait, let me just go over the daily fair value gap to make it easier. Let me just go over this. So on the 15-minute, if you go into the 15-minute, you can see we have a lot of price action to work with. So if you're just sort of starting out, then of course, this is your discount rate. That is your premium rate to target right there. That's pretty obvious. But in the meantime, you have a lot of price action here to work with, and it might be very difficult to navigate it. If you go up time frames, it becomes, I wouldn't say very easy, but you can see that here, if you just have fair value gaps, fair value gap higher, this low holds. Why? Because it has a fair value gap higher. This low holds. Why? Because there's a fair value gap higher. This low holds. Why? Because there's a fair value gap higher. This low holds. Because why? There's a fair value gap right there. This low now holds because there's a fair value gap right there. This low holds. There isn't a fair value gap there. This low holds because there's a fair value gap right there. This low is holding because is there a fair value gap there? I'm not sure. Maybe not. No, I don't think so. So then it just becomes a fact of your trading in the direction of the fair value gaps. And whichever low, the most recent low, has a fair value gap in that range, then it becomes very easy. Now, I know that's not your question. Your question was, when do you use? It is, for example, here. You can say, all right, there's not a lot of price action here going down as well. So here we could use the 1 hour. On the 15-minute, if you notice, there's a lot of price action here. And as a general rule of thumb, you would either use the 15-minute or the 1 hour for your daily fair value gaps or your daily discount rate. For your weekly, you would either use the 4 hour or the 1 hour. again, it depends on what do you want. Like on the 15-minute here, you are more reliant on structure. What I mean by that is right here, you have this intermediate term low, right? Then this is your new intermediate term low. So you're more reliant on structure. But what you can do here is, of course, if we zoom out again and you combine the time frames correctly and you combine everything correctly, then here you have a 4-hour fair value gap where you can go into the 5-minute again. And then you just have your new context right there and you trade that. So it's just very dependent on what you want to do and what you want to use and how far we are from the closest premium rate. Because if this was the closest premium rate right there, then likely I would not have used the 1 hour and I would have preferred the 15-minute right there. But the 15-minute might be more difficult to navigate because there's more price action to work with right there. The same for, because in the video I mentioned EURUSD right here. And this is beautiful. Did you all notice this? I hope you all noticed this because it was beautiful. And not really that it didn't deliver. It's beautiful because price is waiting for that fair value gap. Price already, believe me, price is ahead of that time, already navigating towards that future fair value gap because it's already seeing that fair value gap. It's already getting ready. It's making it easier for next week. It's sort of giving a push next week. Like, here you go. You have an easy time getting into that fair value gap. Here you go. It's the same with this. Whenever you have this fair value gap right there, notice what happens. You have the same 1, 2, 3. This is your expansion phase. Then here, that third candle right there. Look at that. It's moving higher. Why? It's preparing this candle to create a new expansion lower. That's beautiful, right? That's I don't know. It's beautiful to me. But yeah, that's like it's preparing the next candle. It's like friends helping each other out. I don't know. But yeah, that's the same with this weekly fair value gap. So I was saying, if you combine the time frames correctly, that here on this 4-hour order block right there, that 4-hour fair value gap. Now again, this was a Friday, so that's not the highest probability. I personally wouldn't take that. But on the 5-minute, if you go into the 5-minute, it might be more difficult to navigate price here because there's a lot of price action to work with. So if you go into the 15-minute, and here you would either use 4-hour discount rate, either use 15-minute or 5-minute, not the 1-minute, especially not the 1-minute. Then right here, you would say, all right, we just have this fair value gap and that fair value gap to work with. Now, this is where the details come in. Because did this swing low right there, did that swing low come into a discount array? It did not. So is there still a reason for price to come back right there? Yes, there is. That fair value gap. So that is where it's dangerous if you place your stop loss right there, or if you enter right there and you place your stop loss right there. I would prefer it right there. And the reason why is because we still have that fair value gap right there. Is the RR worth it in this case? On a Friday. If this was a Thursday, I would have said, yeah, go for it. If it was a Friday like this, no, not really, not really. So that is why it is important. I hope that makes sense. And if you use a 1 hour, so a 1 hour discount rate or a premium rate, you would use either the 5-minute or the 1-minute. Remember, 5-minute, you have to, you need less price action. So 5-minute, it's already okay to take that first fair value gap higher, which then it becomes very easy for you to trade off of. And if you use the 1-minute, then you need more. The lower you go in time frames, the more confirmation you will need. So for example, if we go into this fair value gap right there, and we take a look at the price action right there. Don't know during what time this is. Wow, London close, fine. It's all right. Here you would only need one fair value gap lower. So that right there, that is already your entry. That's perfect. But on the 1-minute, you can imagine that, of course, you would need more price action to work with. Because just one fair value gap lower is not going to cut it on the 1-minute. Unless you potentially have 15-minute PD arrays. And then you might only need one fair value gap lower on the 1-minute. But right here you would need, I would suggest 2 fair value gaps. But if you go into 15-minute, maybe it's fun to see. Do we have something to work with? We have one fair value gap right there. And you can see this context, the 1 hour context, the 1 hour low right there. It's just, everything right there is just a market maker model. Not everything, because you need the context. That's what makes it a market maker model. And here, if you go into the 1-minute, one fair value gap lower is enough. Look at that. Now, you might not have gotten tapped in, but if you marked execute, I'm sure you would have. And if your broker is nice, then yeah, you might have. And there you need only one fair value gap. Hope that makes sense. Hope that makes sense. Let me see. Let me see. What you do once weekly objective is achieved on Monday and Tuesday itself. Ooh, that would be very early for price to reach the weekly objective. But what I would do is I would zoom out again and see if we can target a little bit further. So what I mean by that is, let me actually grab a pair where we could reach the target very early. For example, if we were to reach this target right there early, that could happen, could very well happen, that we reach it already on a Monday or on a Tuesday, because we're pretty close already. Then what I would do is first off look to the left and see if we have a fair value gap or something to target, which we have right there. But then again, it is being careful that once we do reach that, again, it's the same process. Believe me, I do this all the time. It's when we take out that high, I need new context to go higher off of. So I need new context to go navigate towards that daily fair value gap right there. So that is very important for me. And then once we do reach that as well, once we already reach this, I would compare it to other instruments, other pairs, using the filtering process and see, all right, do we still have a clear weekly target or weekly objective on the other pairs, on the other instruments? If yes, then I would prefer to trade those. If not, then I might just stay out, or I might trade it if it's looking very nice. Now, that depends on the trading plan, because we have a filtering process trading plan where you use a minimum of a 4 hour, and you have a 1 hour trading plan where you always focus on one instrument. If you always focus on one instrument, then the whole case changes, because you can go into the 1 hour time frame to navigate price more. So, hope that makes sense. Ario, can you please tell me how you navigate through the time frames, the way you zoom in and zoom out on certain time frames? It's like you have context on how you go through the time frames. Yeah, it's a great question as well. And I love that you're asking about time frames, because time frames are really important, and they're like your toolbox. They are like your guidelines, your time frames, and it's beautiful. So whenever I go into certain time frames, there's a thought process behind it, and there's some kind of steps behind it. When we have what I just mentioned as well, was if we have a weekly PD rate, then I go into the either 1 hour or 4 hour. Monthly is either 4 hour or daily. Then daily is either the 15 minute or the 1 hour. 4 hour is either the 5 minute or the 15 minute. 1 hour is either the 1 minute or 5 minute. 15 minute is 1 minute, or you can even go even lower, but that's not what I would do. So that is sort of the things I do. Hope that makes sense. Exactly, Eric. Eric says this perfectly. Thank you for that, Eric. Appreciate that a lot. What's your view on inversion fair value gaps? My view on inversion fair value gaps is that it can be nice, don't get me wrong, but it's pretty irrelevant. And what I mean by that is that, for example, we have this fair value gap right there, right? We also have this inversed fair value gap right there. Now, does this inversed fair value gap benefit? Or is it any beneficial? Does it give you anything extra? No, because we were already expecting higher price off of this fair value gap alone, because this is your short-term range right there. So this inversion fair value gap is not that, it doesn't really matter. And that's what I feel like, and then it leads me to the rant again, where if we have 1,000 PD rates on our chart, then it's the same thing that if we just did this, and we would have said, oh yeah, perfect support, perfect resistance, look at that resistance, perfect support right there, perfect resistance. And then we scroll to the left and we see, oh, resistance right there, resistance, oh, short-term support as well. Look at this resistance, look at it, perfect resistance. And there, support, sorry, perfect support, perfect resistance, resistance right there, becoming support, perfect. It becomes a case like that. And usually smart money, quote unquote smart money traders, they are obsessed with making fun of quote unquote dumb money traders, but they actually do the same. Because if you have an inversion, if you have a reaper, if you have this, if you have a mitigation blocks, if you have breaker blocks, order blocks, fair value gaps, if you use all these PD rates, then there's always a reason to trade. There's always a reason for price to go higher. You can justify every single price action. And is it then truly random? That's what makes it random, right? If you can constantly justify something, then yeah, I think it is random. And if you can't even have a 100% win rate, then surely it's random, right? It must be some kind of random, even though there's some kind of algo, if that makes sense. I would like to ask you about your insights on IPTA ranges. I don't think you need them. And again, that's the same thought process where you don't really need, like, for example, we know that price is going higher based on the dollar, just based on structure, order flow, whatever. We know price is going higher. If this is a high from the 60 days ago, 40 days ago, it's not really relevant to me. Like, it doesn't really matter. It's again, the same with your inversion fair value gaps or whatever. It doesn't change the fact that we are going higher, or whatever happens after that, it doesn't change anything. So that's how I view it. And that's why a lot of things, like, you don't really need it. Mystical fair value gap on Nifty. What is a mystical fair value gap? Sounds very magical. GC. Let's go, Lisa. Let's do it. GC. What is GC actually? I'm not sure what GC is. Is it gold futures? Is that what you mean? Then we went over gold as well. And right there, it's still a battle between that daily fair value gap and the weekly fair value gap as well. GJ and EJ, let's do it. Let's do it. Let's do it. Oh, GBPJPY. Where are we? Where are we? Ah, we have reached the overlapping part. Very nice. All right, we've reached the overlapping. So the first target actually is pretty clear, right? I don't know if you can see it, but this daily fair value gap, that's pretty nice, right? Let me actually delete some stuff. That daily fair value gap is pretty nice. That's the first target for this week. Afterwards, if we do disrespect that fair value gap, the next target is that high as well. Let's see what we're doing on a weekly basis as well. Ah, weekly fair value gap. Look at that. Isn't that beautiful? Then on the 4 hour, do we have some fair value gap to work with right now? We don't. But weekly fair value gap, what I just mentioned, 1 hour potential entry. Right here, what do we see? We have that fair value gap to work with. Now, this is a Friday. This on a Monday, if I see this, even if this was not rejecting like that, and it was like that, still wouldn't be an entry to me. Just because it's a Monday and this happened on a Friday, I would want new discount rates to work with higher. So what I mean by that is a new 4 hour fair value gap higher to potentially target this daily fair value gap right there. Now again, that's pretty close, right? You might not get a 4 hour fair value gap higher right there before we reach that target. So again, then it's just waiting for higher prices as well and using the discount rates that are here in the form of this breaker as well, which by that time will be formed with a nice overlapping fair value gap right there to target price higher, because weekly is clearly saying right here, yes, we are going higher still. So I do quite like this actually. I do quite like this. Then EURJPY, what are we seeing? Weekly fair value gap, same thing. Now, before I go into the daily and 4 hour, I want to know if we've reached that weekly fair value gap before, if we reached that target right there before we came into the weekly fair value gap, I still want higher prices. If this came into the weekly fair value gap right there and we are now sweeping that high, I'm not too sure if I want higher prices. So just to give you a heads up right there. Perfect. Perfect, perfect. We came into that high before we came into the weekly fair value gap. So now I would expect higher prices. So let me delete all this. That would be my target. Then on the 4 hour, nice, nice. This is looking nice. This is looking absolutely beautiful. This is a very nice market maker model setting up right there. What you would do now on the 4 hour, I can already tell on the 4 hour right here, you don't need the 1 hour, because on the 1 hour, if I zoom in, look, this is a lot more price action to work with. So here you would need to use the intermediate term lows, intermediate term highs. You don't need that. If you go into the 4 hour, you can just see, just follow the short-term ranges until you reach that high right there. And use news to navigate the day that you want to trade. So you want to focus on Euro and JPY news. right there. Let me actually take a look at the economic calendar and see when we have those news events. Wednesday, Thursday. Nice. Yeah, Wednesday, Thursday. That's where you want to have your main focus. Wednesday and Thursday to continue higher off of the short-term ranges right there. It's a nice. It's actually looking pretty nice. I like that. Ario, love you, mate. Love you too, brother. Love you too. Love to see it. What's up, Vicente? Vicente from the Philippines. Love to see it. Okay, go through Euro USD price action of last week, especially Wednesday and Thursday, as I was looking for buy there. I want to know what you would have done on both these days. For sure, let's do it. Let's do it. Euro USD. And I think I know which price action you mean. Yeah, this fair value gap higher as well, right? Yeah, I can understand why you see that. I can understand why. Because we came off of that low as well right there. Right there. I can understand why you would see that for sure. The only thing is that overall, we've been very bullish. So that's the first part. And what I'm doing right now is, I want to be very clear, is what I'm doing right now, I want you to notice that I am stacking up bullish arguments versus bearish arguments. Whichever one has the most arguments wins, or if they're very equal and I can't get to a clear winner, then I stay out. So let's focus on that. Let's try to see if we can get to a winner. So right here, what are we seeing? Overall, we've been very bearish. All right, just structure or flow, whatever. Premium rates have been holding. Overall, we've been very bearish. On the dollar as well, because the dollar is very important for your USD, we were also still very bullish. Yes, we had this rejection, which I did like at the time. I liked that rejection because we had a huge rejection right there. We were overall still bullish. All right, but we might continue low right there. What do we have going for us if we do want to continue higher? We have, first off, we swept those lows. Now, it wasn't a clear monthly discount array. It was, what was it? Was it a previous month's low? All right, I'll give you that. Then it was a swing low on the weekly. All right, I'll give you that as well. Nice. Then on the 4 hour, we have this fair value gap higher, but overall, we have been bearish. So right there, what I would do and what I mentioned in the mentorship was I would prefer seeing a new fair value gap higher off of that fair value gap higher right there. So once we had this price action right there, what I would want to see is coming into this and then continuing higher with a new fair value gap higher. Then that new fair value gap higher would confirm price to go higher for me. And then that new fair value gap higher, that is where I want to take trades off. That's the same with, I don't know if you saw the video as well on EURGBP. It's very similar. Right here, we had a sweep off of those lows. And then we had a 4 hour fair value gap higher. Now, in hindsight, of course. In hindsight, this is beautiful. But at that moment in time, we don't know if that fair value gap wants to hold or if this still wants to continue lower, because overall, we've been very bearish. So what do? You wait for, on the same time frame, you wait for a new fair value gap higher right there. And that is where you can get involved. And then afterwards, this one as well, if it wasn't for that Friday. So I hope it makes sense. And then eventually, of course, once we have a very deep retracement, because this is also what you need to understand. And this is where you would, this is something or things that you would notice if you stick to something for a very long period of time. You start to notice these things. They are little details, little intuition details, as you can call them. It's where usually when we continue higher and we have a breaker right there and a fair value gap right there, there's literally no reason for price to continue low right there. Or what I mean, a very deep retracement. So just this sting, that candle, I would expect the next candle to continue higher. If this happens, boom, that's me done. That's absolutely no reason anymore for to look for longs. Even if we take out that low right there, that can be a very early indication right there. Once we take out that 4 hour low, that we don't want to continue higher anymore. So that makes sense. Let's see if we actually got something right there. Not really. But I can see why you would take it. Wouldn't be the worst trade in my opinion. But you can see like the probabilities, if we now compare and go over the bearish versus bullish arguments, they're almost like 50-50 right there. So there's not one true winner. So in that sense, I would just stay out of the market. And I would also not take shorts until we do take out those lows, and then we can continue looking for shorts again. Great question, by the way. Great question. Hi, Oro, can you explain what read is? I heard you mentioned ST and read. What does read mean? What it need for rule 60? I'm not sure what I mean with read actually. Maybe I meant read. Read? Sorry, re. Maybe I meant re. But it might just be my accent. Maybe I meant re. A re-entry is just another entry after the ST. That's what you would want to take. Unless I said it in some sort of context where you need to read the price action. And with reading the price action, I mean just you're scouting and seeing the things that you would want to see. That makes sense. For example, if we have a rejection right here above that high, you're reading price action. And what you can read from price action is that we are sweeping that high and we're not closing above that high. That makes sense. Then you're reading price action. Hope that makes sense. Yeah, thank you for that, Mac, by the way. It's beautiful. Looks very good. Looks very good. EJ and GJ for this week. Thank you for the signals. A bonds market. Yeah, let's do it. Let's do it. Bond market. I've actually removed that. If you haven't noticed, I removed them because they just sort of became more so confusing for me and weren't really clean. But right now I can already tell they've been cleaner. Oh, nice. They finally moved out of this big consolidation. Very nice. Whoa, this is a pretty long time ago. It's when I even had the P array on my thing. Either way, it doesn't really matter. But all right. So here we took out that low. Yes, we did take out that low. All right. Then my first thing that I always want to see is I zoom out, of course. But I also want to see any fair value gaps that are close with the overlapping low right there. So this right there, this order block, for example. Right there. Or mitigation block. Sorry, the mitigation block right there. With some overlapping fair value gaps in the form of potentially the volume imbalance as well. Or that fair value gap. Not really having fair value gaps. But I would want this to hold and to continue price, push price lower from there. Reason being is because price has no reason to now come back into the range very deeply. No reason for something to do something like this. Can happen, but it would be lower probability in my eyes. And the reason I nowadays just stick to the dollars because it gives me somewhat more clarity on my side. I just like it more. But if we do disrespect that, then the next target is, of course, firstly that order block, and then secondly that fair value gap as well right there, which could be nice. I'm interested in the mentorship tier 1. Can you tell me what I would expect each day in the mentorship? Do you live stream? Do you explain your daily buys? Are you available for Q&A? So it depends on the essential and the masterclass. I'll tell you the difference. If you want more information, you can send me an email at info@ario.io. And that's where I'll fully help you. So I'll briefly explain it here. With the essential, so the tier 1. I don't know if you with the tier 1, you mean the masterclass or the essential. The masterclass, what you can expect is every day you have a forecast video, every day you have a market breakdown video, and you have an enrollment video, which are about the concepts that we use. So those are educational videos. And in the masterclass, you can join the Discord, where you can private message me as well. And where we have every Tuesday, London, New York session, every Wednesday, London, New York session, every Thursday, London, New York session, every Friday, London session. We have live streams inside the Discord. Again, suited to your time, whatever you want to use. So yeah, we are active during New York as well. And yes, you can ask questions. I explain my daily bias. In the essential class, you wouldn't get the Discord, but you would get the educational videos, so the concept videos. You would also get the daily market breakdown videos and the daily forecast videos. But I'm also less available for questions inside the essential. Hope that makes sense. And again, send me an email on info@ario.io and I'll help you for sure. Beautiful Emma on USDJPY from the exactly, Eric. You know it. It was beautiful. It was very, very, very nice. Very nice. Oh, I just skipped to the bottom again. There's so many things. I love to see it. Hey, Zeus, what's up? What's up? What's up, brother? Oh, I love to see Seus here. What's up, brother? Just to say much love. Look forward to new enrollment on the mentorship. Love to hear it. Let's go. Love to see it. Whoa, another nugget. Thanks. No worries. I don't know which nugget it was, but I'm sure I can trust you. So you're saying liquidity to fair value gap every time. Also, how do you mark your chart at the start of money? Give me these questions have been asked. No worries at all, Andy's. No worries. A lot of questions have been asked, so don't worry about that. You need to ask them. Please, please ask them. If there's any questions on mind, please do ask them. There's no worries at all. So how I start actually is very funny. So it all starts, it sounds very weird, but it all starts for me with if we are going higher, where are we likely going higher from? So on a weekly basis here, if we are going higher, where are we likely going higher from? On a weekly basis, I would say, well, we have this weekly fair value gap, but that is a too deep of retracement to go higher to that target. Then on a daily basis, we have that daily volume balance, that daily order block right there. All right, that's pretty nice. So that could be nice. Then just that target. And once we do have that retracement, then this retracement already gives you your context because you have that daily discount rate to that daily premium rate in the swing high. You don't even need that drawn liquidity right there. Just looking at the right there. Then indeed, what you mentioned is once we take that high, we usually go from liquidity to targeting a fair value gap. Exactly what you mentioned as well. But how do I do it? I haven't defined actually how I start marking up my chart. It might sound weird, but I would say I usually go, well, I know how I do it, but I try to explain it in a non-paywall way. What I mean by that is in the mentorship, I have a very specific way of going over it. But right here, I would argue, or I would tell you, I mark the PD raise. That's the most of the insight I can currently give you. I mark the PD raise. I am also, like I did here, or like it said here, please do a top-down on analysis of market structure knowledge you gave, please. I will also do a top-down analysis video in the AUDUSD guide as well. But yeah, I would say mark out the PD raise, both the premium raise and discount raise, and that will already give you a lot of context. For example, you have this discount rate right there. Is that relevant? I would argue no, not at all, because you have this weekly fair value gap. Is that even relevant? No, because we're close to drawn liquidity. So this is the most relevant right there. How can we deliver into that? Discount rate, short-term ranges right there, and that is where structure also comes in. And on 4 hours as well, where structure also comes in. Oh, that makes sense. Oh, that makes sense. I'm sorry if it's a little bit vague. Analyze Litecoin, or Litecoin, Litecoin. Yeah, nice. Do you want the specific one? The perpetual contract. Ooh. It's already giving me flashbacks of Bitcoin. Very, very, very ugly. But it's very dependent on Bitcoin. That's what I don't like, because whenever I feel like I'm analyzing Litecoin, for example, I feel like I'm just analyzing Bitcoin, which, I don't like. But what I can see here is we are coming into that order block right there, which would actually mark right there. Coming into that order block right there. If we are continuing lower, then we have a monthly order block to work with right there. Potentially monthly fair value gap, which will take another month to form. But right here, in the next 10 hours, what we also have is this weekly fair value gap to work with. Now, depending on if it will take ages to get into the weekly fair value gap and then continue lower. But that could be nice. That could be nice. So by the looks of this, I would actually be bearish on this this crypto, this coin. It's really incredible how much the AUDUSD guide helps. I swear to God, I already watched the AUDUSD guide so many times. Love to hear it. Love to hear it, Eric. You're the best, man. Love to see it. Yeah, you're helping out a lot of people, Eric. I appreciate it a lot. Appreciate that a lot. I'm 45 minutes late. Hello, Ario. How are you, man? I'm doing great. Thank you. Doing great. Thank you for asking. How are you? And no worries. You can always just watch it again. No worries at all. Do you use seasonal tendencies? I used to use them actually. And then I somehow made fun of them. In also live streams, I believe. I made fun of them because, and that leads me to saying I don't really use them. because what I always found is, and what always was being taught, is that seasonal tendencies, they come into play when price action is already agreeing. If that is the case, then why do I need the seasonal tendencies in the first place? Because price action will already tell me what it wants to do. So in that case, it's quite funny to me actually when people say a lot of times like, September should be bearish. September will be bearish. Like, okay, might be nice. Like, you might be right, but from that standpoint, it's just purely gambling, in my opinion. It's just guessing. You're guessing. And we will also notice if it's bearish because price action will tell us if it's bearish. So in that case, again, might be a nice confluence, but it's more so a nice confluence for your psychology than it truly is for your trading. That's how I view it. But yeah, you're always welcome to disagree. No worries at all. Anu, can you guide me what to see, where to focus on, please? I would focus on the A2Z guide if you haven't watched that yet. And if you're like, it depends on how new you are. If you're new to this channel, then welcome. Then I would say watch the A2Z guide, and I'm very happy to have you here. Exactly. Eric already answered me. Eric, you're the best. You are the best, my friend. Cyprus. Wow, that's insane. Love to see it. Greetings from the Netherlands, my friend. ETH USD. Let me guess. It's the same as Bitcoin. Let me see. What are we doing? We just came below that low right there. We did already come into a monthly CB right there. Is it me or I just don't like crypto? I just don't like it. As in the technical part, the trading part, I just don't like it. But that's me. That might just be me. Because I know like the crypto guys, they are usually killing it. The weekly fair value gap right there is already a first drawn liquidity for me. So what that means is that if we get some bullish price action right there, then I would target that weekly fair value gap right there. And that weekly fair value gap can also be responsible to push price lower. So once we have that traded into, I would want to see lower prices off of that. So yeah, hope that makes sense. My advice, watch the A2Z guide videos slowly and repeat them as many times as you can. Trust me, every time you watch the same video, you learn something new. Exactly, perfect. And it's beautiful because what I mentioned as well in the video is that some things that didn't make sense in the beginning, in very early A2Z guide videos, they will make a lot of sense if you've now watched a lot of videos of them. So yeah, damn, wish I found this channel earlier this year. Well, you're still early, I reckon. You're still early. We're still on our way to take over the industry, like some people mentioned. So we're still early, Everyone that's here is still early. So no worries. Imagine where we are in a few more years. And that's all thanks to everyone that's here currently. Can anyone tell me I have basic knowledge if I watch ours mentorship? Would it be so it will be understandable or not? Depends, really depends. Really depends. I do think the A2Z guide, either way, if you have zero knowledge or you have a lot of knowledge, it will benefit you a lot. So yeah, you can try it. You can try it for sure. And no questions, a lot of notes. Thank you, Ario. Appreciate your time doing the stream. Hey, appreciate it a lot. Thank you. Appreciate that a lot. Means a lot to me. I love to see, like, a lot of people are sending me notes on email as well. Like, that's insane. That's insane. I love to see that. Let me see. Where was I? Nice. Oh, OPU. What is that? Up USD? Up USDT? Up. I've never heard about that. Is this the right one? Correct me if that isn't the right one. Let me see what it's doing. What is it doing? Where are we on a monthly time frame? We just swept this monthly high right there. We were also inside that monthly fair value gap, but also in the monthly order block right there. Weekly, what's the weekly doing? Let's see, what is the weekly doing? Swept that. No weekly fair value gaps lower right now. Weekly fair value gap right there with a weekly order block. Keeping in mind also the monthly order block that we just saw right there. Then on the daily time frame, what are we doing? This is very 50-50 for me, but right now I would still lean towards higher prices. The reason being is because we had a monthly order block, then we had a weekly fair gap with a weekly order block as well. So there's more going for higher prices right there. The first target is very obvious in my opinion, which is that daily fair gap right there. After that, we could see it potentially reach for that, but it depends on what it wants to do for that daily fair gap. If this daily fair gap now wants to push price lower, then the thing changed. So again, that's an if-then statement. That's not random. That's if-then statement, because if that daily fair gap pushes lower and we create a new daily fair gap lower, then this is your target. And then eventually this is your target as well. And then eventually that right there is your target as well. And then we drop to wherever we came from. And then if that doesn't happen and we push higher with fair value gaps higher, then this is your target and that is your target. That right there. Hope that makes sense. How do you run order flow on Asset Bro? It's a order flow. It's funny because there's one thing that I don't really share, or maybe in details, but I don't mention it, as in I don't say this is order flow, blah blah blah, on YouTube. And that's like my baby, order flow, I would argue. And order flow is a lot of, that's where we go very in depth on in the masterclass itself, in the mentorship itself, essential as well. But it's a combination of structure as well, order flow. Like, you can figure it out for sure. You can figure out what I mean with order flow. Like, it's not that I haven't mentioned it at all. When you started, did you ever use any type of indicators? This is a great question, and I actually did not. I was pretty blessed to be in a position that I immediately skipped to smart money, which was pretty nice. But in the beginning, like maybe for a week, I tried indicators, but you know, I was impatient like everyone and was just looking for the best thing, and thought like it didn't work for 1 week, so let me skip over it. ROU is OP. Love to see it. Overpowered. Love to see it. 3-session preview to confirm order flow. Oh, that's pretty interesting, actually. It's pretty interesting. Pretty interesting. What time frames do you enter trades? Usually it's the 5 minute, 15 minute, and the 1 hour. That's where I usually go for. Just a personal preference. You can use a lot of things. Monday's video on the HC guys is actually about swing trading, because I think swing trading is a lost art in the trading community nowadays. And which is very true. I got a lot of suggestions as well for it. Let me see, where was I? I saw a question, but I don't remember. Where was it? Yeah, this one. Hello, Ario. What steps would you advise if someone wants to grow from small account size, and what kind of trade setup would you use? Would you see if you were to grow a small account, like a $10 account? It's a very, very difficult question. Usually what people do is they try to sculpt the absolute living shit out of a small account. What I would advise is, in that case, try to build it to something like where you can afford 2 challenges. So what I mean by that is try to scale it. So you would need to use a bigger risk than a 1%. Of course, I think 1% isn't even possible to risk. So in that case, try to scale it to, I don't know, $100. That's a lot of percentage that you need to make. So you might blow the account because the risk and reward is not always in your favor in that case. But if you do manage it, and it will take a long time, because from $10 making a 10x, that takes a long time, believe me. And what you can then do is you can buy one challenge where you still have $50, and it can be just a small challenge, and you try to pass that challenge while still trading the other one as well. And you always have a backup. So you sort of play chess constantly. You always have one backup. So if the one gets taken out, if you fail the challenge, you have the backup account as well. So that's what you would want to do in that case. But again, it's a difficult task. It's a difficult task. I don't want to discourage you, but it will not be easy. Does your ST model require a balanced price range, or would it just be an extra confirmation? I know the answer to the question, but it's also a mentorship thing where yes and no. As in, yes, it is indeed an extra confluence. In the mentorship, we teach something extra to the ST though. So yeah. But you're on the right path. Yes, you are. You are. You for sure are. For sure, for sure. Or have any other of your students passed funding? Currently, quite a lot actually. I need to update it as well. Like currently, we had one member that messaged me as well, which was in the first month that she was a she actually. She is a she. In the first month of being in the essential class, so not even the master class, got funded. And currently we have, I'm not sure how many it is, but we currently have over 1.5 million in funding just reached within the first 5 enrollments. So that's the first 5 months of doing the videos, which is pretty, I don't know. For me, I'm very proud of it. Like very, very happy about it. Because that's the goal, right? The goal was always to make money, so off of trading. So yeah, a semi masterclass. Yeah, I love to see it, a semi masterclass. I like that. I like that one. It's actually a great name. In-person course, great question. Yeah, I would love to do an in-person course, but it just takes a lot of materials, as in I need to first set up a lot of, because I think when you do an in-person thing, it more so becomes financial advice, because they're very strict in the Netherlands about that. So I think I need to have something about that as well, or be very careful with what I do in that case. And then as well, I need to have a certain office, and then as well location that everyone can get to as well, which would be nice, of course. So yeah, I would love to do it. Would love to do it, and certainly is a plan. Certainly is, but it will take some time. Will take some time. Like not in the next few months, maybe the next few years. Thinking long term. And then eventually, if we have an in-person course, I would love to provide people with capital as well, if you can manage it as well. Like that's the next step. Let me see, where was I? How long have you been trading? Share your journey with us, man. My journey has been an interesting one. It's I'll start somewhat at the end, but I was around 17 years old when I was playing professional basketball in Italy. Then COVID hit as well, and I was like, I don't know if this is for me. I already quit school by the time, so I was already done with school essentially. I was in my second year of university, and I just quit. And again, of course, it's a big, somewhat, they would say it's a big risk, and it somewhat is, because you're reliant on yourself. So you need to take full accountability to whatever you do. And after that, COVID hit, then I went into e-commerce. And when I was in the e-commerce, I did pretty well actually. I made around like 500 a day, which isn't that bad. But if you then consider also the margins that we were working with, and then also for marketing eventually, because we spent nothing on marketing at the first place, but then eventually we got screwed over where we needed to have marketing, which is, it's a lot if you are familiar with e-commerce. And then the margins were shit, and then of course taxes as well. Like the tax man is coming for your ass. And then eventually I was like, yeah, I do like this, and the money is nice, but I want more, and I want more freedom, where I don't have to get the packages and do the packaging, etc. I know you can. Maybe I was just very bad at e-commerce, for the e-commerce gurus listening. But eventually I just took that money and I was like, yeah, let me just full-time focus on trading and do nothing else. So then like for about 3 years, I was just day in, day out, not going out. You can ask my friends even, like, I'm not sure if they miss me, but I miss them. Like they didn't see me for ages. I was just in my room studying trading, watching videos, full-time trading over and over and over until eventually I got profitable. And it took a lot of hours, a lot of hours. And yeah, then slowly became profitable. Then eventually I coincidentally, like very blessed as well, I just came across someone who's actually, I know, who's a friend. And I told him what I do, which I usually don't do because I don't really like to tell people I trade, to be honest. And the reason being for that is because when you say to people you trade, it sort of gets the wrong impression to them immediately. So either you need to have a very nice term where you say, yeah, I'm doing foreign currencies, blah, blah, blah. And then eventually I talked to him about it, and he said like, oh, I'm actually looking into that as well. And I was looking to invest. And then eventually I got an investor, and slowly from there I've been working with that as well. So yeah, and then eventually how I got to social media was I had nothing to do, essentially. I was trading and I had my sessions where I traded, and then eventually I was like, yeah, but I have so much time left over, like I want to do something. So I just thought I love helping people, and I always did that in the Discord as well. Before Spectre was even a public thing, I was in Spectre helping a lot of people, like enjoyed it a lot. And then eventually I was just like, yeah, let me just go onto social media. Yeah. It's funny how that worked. It's funny because I always tell people like, don't like be very aware of the shiny object syndrome, but how I got to trading and how I think we all got to ICT is because of the shiny object syndrome. So it's funny because I wanted more. So I wanted more. So I got to trading in the first place instead of just sticking to e-commerce. Nice to have another source of passive. Exactly. Of course, it's also another income, which you can't really complain about. It's the reality of things, for sure. I'm the member that got funded in the first month of Essentials. I can 100% vouch. Insane. That's really funny. That's really funny. And listen up, wait. I just told you about the member that got funded in the first month. I'm the member that got funded in the first month of Essentials. I can 100% vouch for Ari's mentorship and guidance. The way that he teaches makes it so simple and finally made things click. Insane. It sounds like I just went on another account and I just typed that. But yeah, it's really insane. And like when people get first funded in the first month, like it's not something I advertise because I think it usually takes a little bit more than that. But when you get funded in the first month, like that's absolutely insane. And quite a few masterclass members have also gotten funded within the first month as well, which is, it's crazy. It's actually crazy. If there is first major news event in Wednesday, then there will be an expansion, right? Does it mean it's a high probability to form a high or low of the day there? Yeah, if there's a high major news event on Wednesday, then yeah, that could very well be a high or low of the day there. For sure. If I get your question correctly. How many attempts to take a trade ID? I actually take one attempt. So one attempt per trade ID for me. If it's a loss, if it's a win, if it's a break even, no matter what happens, I'm out. It's just to save my mental capital, essentially. About 3 years. DJ Khaled. DJ Khaled. Nice. Why don't recommend backtesting? I think backtesting in the beginning could be nice. But the thing with backtesting, and it's also with demo trading, is that you are building unconsciously, so you don't notice it, but you are building unhealthy habits. For example, this type of price action right here. If I take a loss right here, let's say I take a loss right there. The thing I can do in backtesting is I can do this, and I'm a month further. So whenever you take a loss right there, you can skip another month, and the next month you can know, all right, I took another win. In live trading, when you take a loss right there, the first reaction that you will have, because it's unconsciously ingrilled into your brain, it's to take another trade or look at another thing because you want to sort of get it back automatically because you did the same thing on backtesting. But the difference between backtesting is you could skip months and months in price action in just a few clicks. Whereas in live trading, you need to have a lot of patience. What I noticed as well is when I backtested and then I went into live trading, I was backtesting first, and I always had a setup ready on backtesting. So whenever I got to the chart and within the first 5 minutes I didn't see a setup, I would just walk away and not trade. And then eventually the setup would still happen, but I was just too impatient because of backtesting. And yeah, that's how I would see that. So what I always would advise, again, not financial advice, not at all. But if you can risk any amount, any dollar amount, any euro amount, can be $1 or whatever. If you can risk that, then do that. That's way better than demo trading or whatever, because there's emotions involved. So yeah, that's how I would view it. Now I'm at phase 2. Let's go, Nabil. Let's go. I started chance 3 months ago. It took me to pass it 3 months. Was all the time. Love to see it. Love to see it. How many videos are there in the essential mentorship? Currently around, what is it, 210? Correct me if I'm wrong. 210, I believe. But again, that's not all. You don't need them all. Like the core concepts are in the, what is it? Are in, let me think. 7, 14, 21, around 28 videos. I'm doing great, Indian FX. Love to see you here, brother. Love to see you here. Let me see. So how many months will you recommend forward testing before going live? Maybe 1 month. Like the thing is, the earlier you can get to live trading, the better it is. Like, just know that you will lose. You will lose the live trading part. You will lose. You will absolutely lose. No worries. But that's part of it. You need to fail until you start winning. That's the important part. What's up, Rajesh? How are you, brother? Great to see you here, man. Great to see you. Have you ever talked about journaling? How do you journal? I've only watched. Yeah, it's actually a great suggestion as well. And there's a video coming up on the AUDUSD guide as well. It's one of the last though, where I go about journaling. It's one of the last videos. Exactly, SSR Arena. Love to see it. I love the masterclass. You are a legend. Love to see it. The problem with backtesting in TradingView, when you change time frame, it will always skip you a candle. Meaning, yeah, that as well, Eric. It's very inconvenient. But yeah, maybe a couple 100 videos to watch a review. Love to see it. Love to see it. What instruments do you trade? I'm currently profitable with DXY, EURUSD. People telling me instruments are much more profitable. No. If you are profitable with those pairs, don't listen to what anyone is telling you. Nobody. If even ICT told you that you need to trade indices because they're more profitable, don't listen to him. Only listen to your stats and your data. If you are profitable on those pairs, only trade those pairs. So stick to those. Stick to those. Whatever you do, stick to those. Very important. Don't switch it. Don't change a winning team. What do you think for commodities, gold, silver, oil? Can we use them in the AUDUSD? Yeah, for sure. For sure. All right. Perfect. I love it, Andy. Let's go. Love to see it. Love to see it. Yeah, that's nice, B-Reezy. I've heard about that before as well. It's nice. All right, perfect. Thank you, everyone. This was it for now. I'll see everyone next week. Again, remember what we touched on. Very important. Thank you, everyone. Thank you for being here. Thank you for all the positivity. Love to see it always. Does me a lot of good. So thank you for that. Tuesday, new AUDUSD guide video, swing trading as well. Important week as well. So stay tuned for that. All right, perfect. Love you, everyone. Thank you, everyone, for being here. Thank you for all the beautiful and great questions, which leads automatically to a great live stream, I would argue. Thank you, everyone. Have a great trading week. You as well, DJ Khaled. Thank you for this. And I'll see you at the next one. Perfect. Thank you.